Yeah. So most of y'all know who I am. For those of you who do not, I am Randall Ramirez. I go by Randy. And I am the closer for Momentous Title. So if you haven't seen our offices, feel free to drop by here. We're on the first floor at the Turtle Creek location in Suite 100. So we are going to talk about the ABCs of title insurance today. So we'll go ahead and get started. There's my contact information for those of you who do not have it. I'll also display this at the end of the course as well, along with the QR code. Okay, what is title insurance? Who does it protect? So title insurance protects you from claims of ownership by other parties. So basically it protects against losses from problems that arose from before you purchased the property or your clients purchased the property. So the title company will defend you in court if there is a claim against the property and will pay for any covered losses. Title insurance, it's not homeowners insurance, so it's a separate policy, and you only pay it once when you purchase the property. If you sell the property, then the next property you purchase will 99% of the time the title company is going to require that you purchase the owner's title policy, whether it's paid for by you or the seller. So let's see here.
So Randy, just to be clear, like if you're getting a loan, you're obviously going to have title insurance. If you're paying cash, no one it's not like the state is requiring you, but obviously it's a good idea because it ensures that you have good title and someone doesn't have a claim on the title. Correct?
And you will notice on closing statement where the title insurance premium is referenced, it says optional in parentheses because it is optional in the state of Texas. However, there are very, very few title companies that will close a transaction without it because there's just so much liability involved with it. I think there's one in the DFW area down in Ennis who will close, and the guy has been in business for, I seriously think, about 40 years. And he will still close transactions without title and letter. Yeah. So
perfect.
Does
Okay,
anyone
I just
have
wanted
any
to clarify
questions?
that.
You're good. And if you guys have any questions and I'm just kind of rattling on, feel free to say excuse me and interrupt me at any time. Because sometimes I just kind of go off and go down a rabbit hole and kind of nerd out on the title stuff. So
The exciting world of title.
exactly. So okay, so a little bit more about title insurance. So obviously the owner's title policy protects the owners of the properties. And title insurance can also protect if someone later sues and states they have a claim against the home from before you purchased it. Common claims come from previous owners' failure to pay taxes or contractors who say they were not paid for work done on the home before you purchased it. And
But what about like the boundary issue? Or like a boundary situation?
A boundary situation, yes. So if there are boundary issues, I would recommend contacting the whoever issued the title policy and talk to their claims department. Also look, they'll let you know if you received survey coverage and what that includes. If there's any encroachments or anything on the survey, a lot of times the title commitment will reference those on Schedule B, which I'll show you guys a sample commitment here in a little while as well. But yes, if there are any boundaries,
So boundary issues
those are,
might be, and we'll talk about that. They might be covered. A boundary issue.
and if you don't know, or if your client doesn't know, have them look at the contract from when they purchased the property to see if it was included. Also, it should be indicated in their owner's title policy as well, which owner's title policies are generally sent about 6 to 8 weeks after closing. So TDI allows us 90 days, but we generally get them out in about six to 8 weeks. So if a loan is involved in the purchase of the property, then a loan policy is required, or lender's title policies, also known as LTP. Typically, the buyers pay for their own lender's policy, and it piggybacks off of the primary policy, which is the owner's title policy, and is a fraction of the cost. So in the state of Texas, if you're getting a loan when you purchase, it's called a simultaneous issue. And it automatically reduces the lender's title premium to a flat $100 fee. Now, that's just for the lender's base policy. If there are any endorsements that the lender requires, those are extra, which they typically range from anywhere from like $25 to, usually about $100 for purchases. Does anyone have any questions? All right.
So this is y'all's opportunity to just clear up. If this all makes sense, great. If not, like, ask away. I'm gonna make sure you guys understand kind of what we've got, what we're doing with this title business. All right.
What is the difference between title commitment and a title policy? Well, the commitment is generated once the title search is completed. So, generally within the first couple of weeks of being under contract, you will receive the title package, which includes the title commitment and the tax certificate. We generally send out the seller information sheet to the seller side, as well as the buyer's information sheet along with everything together. So the title commitment lists any potential issues, exclusions, or exceptions. So it alerts the buyer to issues that exist and that could cause problems in the future. It does not guarantee that there are no current issues or that none will arise in the future. It's just, we did a title search. These are the things that were found in the real property records. And, these are the things that, either need to be satisfied, which are referenced on Schedule C, or things that we're taking exception to, which is on Schedule B, which we'll be reviewing the commitment here in a few minutes. Okay. So here is how a title commitment is organized. So it's organized into schedules. So Schedule A are facts about the current state of title and proposed transaction. So you'll notice kind of in the middle of Schedule A, it'll have the buyer's name. They're the proposed insured. If there's a lender right underneath the buyer's name, it'll have the lender's information. That the lender is the proposed insured for the lender's policy. Schedule B shows items encumbering the property and exceptions that will not be covered by the policy. Let's second, my screen just went blank. There it goes. Okay, Schedule C are items that need to be released or satisfied in order to transfer a clear title to the new owner. And then Schedule B is just regulatory disclosures that the title company and underwriter must make to all parties. So really, the only, the three sections that you should be concerned about is Schedule A, B, and C. D, nothing to be concerned about. Okay, so this is the jacket for the title commitment. So we have two underwriters at Momentous Title. Stewart Title Guarantee Company is one of our underwriters, and Title Resources is our other underwriter. So each commitment will have a jacket showing who the underwriter is and their information. And then this is just a continuation of the jacket. All right. So here is Schedule A of the title commitment. So Schedule A contains names of sellers, buyers, amount of insurance coverage for both the loan policy and the owner's policy, legal description of the property as well. So. And you'll notice under, so it's the sales price will be listed under the owner's policy. And then the amount of the loan will be listed under the loan policy. So the loan policy and the owner's title policy amounts will typically be different unless they're doing like 100% finance. Then at that time they'll match. So also if you'll notice. Oh, go ahead.
No. So I was gonna say, like, as an agent, when you get the title commitment, what you need to look at is to make sure, you know, that the owner's title policy in section B, like, matches the purchase price, right? And that the lender matches like the amount that they're financing. And then also, you know, it says the interest in the land is covered by, is blank. And that'll say the name of the seller, and you need the name on your contract to match what's in the title commitment, right? Because that's the person who's actually the record owner. So those are the things you're going to look at. You can see in paragraph 3 there, you know, Jimmy Luna, and the vesting deed means the deed of the person who owns it right now. So those are the things you kind of want to look at. Is there anything else, Randy? And of course, you know, the legal description, make sure it matches.
All of our commitments are hyperlinked. So you'll be able to double click and actually pull up the vesting deed. Same thing on, you know, throughout the commitment, on Schedule B and Schedule C. So one thing that actually just came up yesterday, was a vesting issue. So we're closing in a couple of days. I think like Thursday or Friday this week. I sent out, we got the closing instructions from the lender. We got ourselves balanced. I sent the statement to the seller side, and they just notified us that one of the two sellers that are vested in title is deceased. And it's not a Briggs agent. But I would, but I would highly recommend, because no question is a stupid question. I would highly recommend asking, you know, questions. It doesn't matter, you know, how long ago the spouse passed away. I would ask questions and, you know, was there a will? Was the will probated? So now we're not going to be able to close because we had no idea. No one indicated in the transaction that this man was deceased. We sent out the title commitment. We sent out the seller information form a couple of weeks ago. They returned it completed. There was no, the seller information sheet typically asks if there's any, you know, current mortgages or anything like that. So the property was free and clear of mortgages. But no one indicated until yesterday that, this person was deceased. So, I would just urge you to try to ask as many questions up front, because that will help us. The sooner we tackle that issue in the beginning, even before you go under contract, even if it's at a listing appointment, the quicker we'll be able to resolve these issues, before closing. Does anyone have any questions? As an agent, what should you look for on Schedule A when you receive the commitment? So if you represent the buyer, make sure the buyer's names are spelled correctly and the policy amounts for the buyer and the lender are correct. If you represent the seller, make sure the seller who has signed the contract matches the information that says vesting deed and shows who currently holds title. Any questions from here?
At the appropriate spot, can you cover the shortages thing and because I know we checked that box to make sure that's showing up on there. I apologize if that it's sort of a trivial question.
It's an important question and we'll definitely get there.
Randy, I don't know, when you start talking, we're not hearing, at least I'm not hearing Randy.
Randy, we
about
can't hear
now?
you. Yeah, that's better.
Yes.
Laptop closer to me, because I think the microphone is actually in there and not in the camera, so. Okay, how about now?
Perfect.
Everyone good? Okay. Okay, as an agent, what should you look for on Schedule B of the commitments? So areas where other parties have some interest or control the use of the property. This section also has a references deed restrictions, easements, and building lines. These items are not covered by the title insurance and considered exceptions to title. Items 1 through 9 are boilerplate, and items 10 will have exceptions that are specific to the property. So this is the section that's going to reference all of the deed restrictions. As you'll see, there's building setback lines, there's utility easements referenced in here as well. And typically in number 10 is where they'll reference anything regarding the survey. So if there are any encroachments, if I closed a deal a couple of weeks ago where the fence was literally like 9 inches over the building line into the alley, and this house has been, it was built in the 60s, so nothing's changed. So things like that will be referenced on there. And any other issue that the survey covers, or that's included in the survey but is not covered by the title policy. And I have seen fence issues get repaired before closing if it's a big enough issue, if it's like a foot or two over into the other person's property. I've seen the current seller work with their neighbor to get it fixed and corrected. So that way there wasn't any exceptions to title. So does anyone have any questions about Schedule B?
So Schedule B, as an agent, guys, is what on the buy side, it's super important because 1 through 9 are boilerplate for the most part. One's gonna show like restrictive covenants that you'll be aware of, obviously, but in 10 is where they put all the things that they're saying, we're giving you title insurance to show you have good title and you own the property, but these are the things we are not going to provide insurance around, and those are the exceptions. And when this is a commitment, right, saying this is what your insurance policy will look like. And then after closing, the buyer will get an actual policy in the mail, and the policy says, here's your insurance. But remember, all of these things in item 10, we're not giving you insurance for. So it's a good idea for you to look at it and just point that out to your buyer. You don't need to like alarm them, but they just need to understand that there are easements in there and things like that. So does that make sense? I want to be helpful and not confusing, but help you guys understand what this document really is and what it's doing. Good questions? There's no dumb questions. Thumbs up. Okay. All right. I'll stop beating the dead horse. Thank you.
No, I think your input's helpful. Thank you.
Okay, good. Good. So Schedule B is important on the buy side. Just remember that.
I do have a question.
Sure.
On number 10, are any of those on all commitments? That A through G?
Property. Some properties will have, I think the building setback lines kind of vary depending on where the property is in the city. Or if it's more of a rural property, then there may not be any building setback lines. It's specific to, or each property is going to be different typically. I think if you're buying within the city limits of Dallas, they may be similar, but not all properties are going to have utility easements or building setback lines. So,
But for the most
I
part,
would
you are
just,
going
and
to,
if you have,
I think Randy has a delay on his sound. For the most part, you're going to see parties of possession, like a mineral lease, the general exception to any easements that are shown on the survey, you know, things like that. They're going to be in there because they just want the buyers to know, like, we don't insure these things. This is not what this is for. Does that answer your question, Maggie?
Yes, thank you.
Okay. Okie doke.
so as an agent, what should you look for on Schedule B? So if you represent the buyer, and we kind of covered this, so, but it's good to get a little refresher. So if you represent the buyer, you should have your buyer look at item 10 so they understand what is encumbering their property and what they will not be receiving coverage for. If there's an issue, like an easement to the backyard where the buyer wants to add a pool, then your buyer needs to object to that item. If it's advised that they hire excuse me, it is advised that they hire an attorney. Thank you. Hire an attorney to make objections for them, or I'm going to volunteer Zareen. Feel free to reach out to Zareen and she can, discuss with you and, let you know what the options are.
Yeah, I'm not gonna, I mean, we don't want to
you
practice law.
represent-
I'm not gonna write a super intense objection letter, but if there is an issue on the survey that your buyers don't like, call me and we can walk through together what's the best way to handle this, for sure. And also in item number 1, 10 is all of the exceptions. Item number 1 shows any like restrictive covenants or HOA documents like that. So that's another thing that's going to encumber the property. Number 1 and number 10.
We have been opening title like as soon as the listing goes live, or maybe a week before it goes live. If there is an HOA or if there might be items concerning title, feel free to reach out to me and we can talk about that as well. If you represent the seller, you don't really need to be concerned about anything on Schedule B unless the buyer objects to them and they need to be cured. So, any questions? Okay, off to the next slide. Okay, here we go. So this is Schedule C of the commitment. So items
Oops, it looks like you
reflected on
toggled
Schedule
back.
C.
There you go.
Sorry,
You're good. The thing toggled. You're good.
so this is Schedule C. So items referenced on Schedule C must be satisfied or released to transfer title to the new owner. So this section will often reflect existing mortgages, liens, bankruptcies, abstract of judgments, marital status issues, probate issues or vesting problems, or mechanics liens affidavits. So for example, mortgages are common, so everyone's used to seeing, mortgages on here. One of the, one problem we had come up last month was, this was actually a Briggs deal where the listing agent, was under contract and, his client wanted to sell the property. It had previously been her mother's, but they probated the will. We got title back. Come to find out through probate, or, everything was probated accordingly, but she thought she was, she had 100% interest in this property, because her brother was deceased and passed away a few years back. Well, once title work came back, his interest was a requirement listed on Schedule C. Now, his will was found in the probate records and everything, so the requirement stated that, either his interest be, either his heirs sign or his heirs sign their interest over to, the person that was listed on the contract as the seller. So this deal unfortunately fell apart because the seller who was on the contract and had the listing agreement with the agent did not want to move forward and split the proceeds with her brother's heirs, which happened to be his wife and 2 children. So
Okay, quick question here.
those are.
So, for those of us who attended Thomas's deal, Thomas politely, said, "I can't believe you guys." He didn't say you idiots who don't do title work ahead of a listing, are crazy. And then I know most of us looked around at each other and said, it's pretty straightforward in Texas. And and so my curiosity is, what's your point of view? Should we look? I'm a new agent, so I don't know any better. Should we always kind of what I would consider bother the title company to do this? How much work is it? Does my question make any sense?
It is, yeah, and if you, and you guys can be the judge of, what issues there might be, once you've had your listing appointment and kind of, gotten to know your client. And I don't know if you guys have a questionnaire or anything that you ask them. But if you feel that we need to open title, we'll be happy to open title.
I mean, is that a
I
minute,
will
an
say-
hour, a month of work? How big a deal is it for a title company to just square up and say, "Hey, here's who really owns that thing"? Sorry, I can't hear you.
Randy,
A tax certificate.
for some
Yes.
reason we lose like the first sentence that you say and then the sound comes on. Sorry. Okay, that's good. Now we can hear you.
Now you can. I think it has to
Yeah.
do with my laptop. So if
It
you
must
see me
be.
bending down talking into it, that's why.
Sorry, thank you. Okay,
That's okay.
So my question
So
again was just,
we
how big a deal is it for you guys? Because, for a $500,000, I can see, if you're doing a $10 million deal, I wouldn't do anything without, dotting all the i's, crossing the t's. But for those of us who are swimming at $500,000 to $1 million, I don't want to pester my title companies needlessly. So help me, help me
Yeah,
quantify how
it
big a
doesn't
deal is it
matter,
for you
like,
guys?
the price point. If there are title issues and you think we need to get title opened, then we'll get it open. Now, it generally takes us about a week to get a title package back. If it's a rural area, it may take a little bit longer. Or if it's acreage, it may take a little bit longer. Now, I will be, transparent with you guys. If we end up opening title and you've got the listing, but we end up losing the deal to the buyer's preferred title company because they're paying for it, then we lose about $400 to $500.
Okay, that's
So,
what,
because we
that's
still
the
have to
scalar I
pay the-
wanted to know.
Yeah, but I mean, I don't want that to discourage you from requesting, us to open title, because if it needs to be done, that it needs to be done, right? That it has happened over the past couple of months where we've lost, a handful of deals, but sometimes it's just the cost of doing business. But at the end of the day, by us opening title, we were still able to get, things cleared and ready to go. And because, it's a Briggs agent, it's still in the family. So even though we may not be closing it, if it's helping the agent and their client, then I think it's still a win. So,
Thank you very much.
it's making their lives easier, but
Yeah, and just-
you could
that's a
always
great
feel free to
answer.
call me.
I think that's a great
Oh,
answer.
go
I
ahead,
think from a-
Zareen, sorry.
Yeah, Randy, I appreciate that answer. So from a practical perspective, do you need to open title immediately on every prospective listing you get? No. If you think that this is a situation where, for whatever reason, your spidey sense tells you, like, I want to make sure that this seller owns it in full, or they mentioned being married, or like you just want to make sure that it's one thing for us to sign a listing agreement with the person we think is the seller. It's another thing for us to sign a contract with a buyer with the wrong seller, right? Like, we can always amend the listing agreement and include the proper parties. If we find out that someone else needs to sign, once you're under contract, it gets a little trickier. And sometimes also, like, I had this happen a while ago in Fort Worth, where the agent was like, knew the seller, but it's not like they were best friends, and she was just a little bit wary of him. So we pulled title just to see if there were like tax liens or other things that were going to affect the sale, right? Because it was a large price point home, but if they had huge tax liens outstanding against it, they weren't going to be able to sell. So that's another thing that, you like I said, you don't need to do it on every deal, but err on the side of caution, and then just try to keep the deal with us if you can. Because if there is some issue, we can start getting them cleared, right? Any issue that's on here is surmountable. Some of them just take some time to fix, right? Is that judgments or tax liens or things like that? Does that make sense?
It does, and his answer was helpful.
Okay.
Just, we're always managing risk. I just didn't know whether, it was looking something up quick, or whether you guys just spent $1,000 or whatever, so 400 to 500,000 gives me a scalar.
It's a great question. Thank you.
There's something else in my brain. So, if you guys do have a concern, but you don't think it warrants opening title, I may be able to do some research in the property records. I have access to Dallas, Tarrant, and Collin. So I can't get copies. I could probably do like screenshots, like little snippets, but I can go in there. If you're concerned that, your client's got a lien by a contractor, I could probably go in there and see if there's one filed or not. So without having to open title and do a full title search. So feel free to call me or email me if you have any questions, or I'll be glad to help you guys out. Or if you just need to bounce something off of me or Ruth, just always feel free to give us a call, even if we're not closing the deal. I've had several agents call me over the past few weeks where titles open somewhere else, and they were like, well, this is what they're requiring. Does this sound, normal? Because a couple of them have never worked with that specific title company before. So they just, kind of want to get a second opinion. And, in both cases, the title company was, had legitimate items listed on Schedule C that needed to be resolved. So, anyways, sorry if I went down a little rabbit hole there. Does anyone have any questions about Schedule C? Okay. So I think I think I got ahead of myself. So as an agent, what
I think
should
I need
you
to
look at on
reorganize the
Schedule C
slide.
when you receive? That would, I feel like I keep going backwards, but it says I'm going forward. So I'll go ahead and cover this anyways, because it's always good to know. So if you represent the buyer, you should not be too concerned about the items on Schedule C, as the items, as these are items that the title company and the seller need to clear up before clear title can be conveyed, which is, i.e. mortgage payoff, judgments, or anything like that. If you represent the seller, you need to make sure that there are no surprise liens and that the seller is able to pay off all of the items noted. So if you're concerned your seller may have financial issues or owe too much against the property, let us know, and we can, at that time, I can try to do some research and see, if there are any outstanding items owed on the property, or if, I find some things, then we may end up opening title, so that way you can get an actual commitment and, be 100% sure when you have the conversation with your seller. I feel like we just went over this. Sorry, guys. Here we go. Okay, so Schedule D. This just has, the underwriter information, information about Momentous Title. You'll see Kensington Vanguard referenced here. So they are one of the parent companies to Momentous, as is Briggs Freeman. So, and typically you'll see the premium and endorsement charges listed here as well. So again, there's just Schedule D is just for informational purposes and disclosures for the parties about the underwriter and us as the title company. So deletion of arbitration provision. So the arbitration provision in the policy is a common form of alternative dispute resolution. It can be quicker and cheaper means to settling a dispute with your title company. However, if you agree to arbitrate, you can give up your rights to take the title company to court, and your rights to discover and your rights to discovery of evidence may be limited in the arbitration process. Does anybody have any questions about that slide? Okay. This is just a general privacy policy notice. Okay. And so what is a title defect? What happens when there are title issues and what are title objections? So I know we've kind of covered this already, but we'll kind of go over it in a little more detail. So a title defect is anything that can cause a title to be considered invalid or defective in some way. Invalid documents due to forgery, fraud, undue influence, duress, incompetency, incapacity, or impersonation. So failure of any person or entity to have authorized a transfer or conveyance. A document affecting title that is not properly executed, signed, witnessed, notarized, or delivered. Undisclosed or unrecorded easements not otherwise apparent on your land. No right of access to and from the land. Let's see. There are many others. Lien issues that can cause title effects. A lot of these we've kind of covered, but so what happens when there are title issues? So the buyer has the right to make objections under section 6D of the contract if there are any items in Schedule B that they want cured or do not work with their intended use, i.e. building a pool or adding an addition to the house. If they want to build a pool, if there's an easement in, going through the backyard, or if they want to add to the house, but there's, city setback requirements that could, those are title issues that would need to be resolved. And what are title objections? So basically, the buyer objects to items and asks the seller to cure them. Seller can try to cure, but is not required to cure them. So if you happen to run into this situation, let me know, and me and Zareen both, and we could talk through the options of what the next steps need to be. So
I can give you guys an example.
anyone have any questions?
I can give you guys a good example of this. So we had a deal over here in Fort Worth where the agent was helping the clients buy a property and they were going to build a house and they already had the plans actually. And when they got the title commitment, they realized there was a setback on like the west side of the property that was going to like conflict with their building plans. And so this was in the city of Westover Hills. So the buyers objected to that. And the sellers went to the city of Westover Hills and applied for a variance and got it approved. So then the sellers were able to cure that title objection and the buyers moved to closing and it was fine. So that's just like one example of when there may be a title issue that the buyer can object to and the seller can cure. Is it every time that the seller is able to like apply for a variance and fix it? No, but that was just like one example. We were like, let's try that and see. And the sellers were like, sure, we'll try. And they got it approved. So hopefully that helps. Any questions? Has anyone else had an experience with like title issues that they want to talk through? Guess not.
All right, moving on. So here are some title insurance FAQs. How long does a policy last? So most policies last as long as you or any heirs retain your ownership interest in the property. Does a title policy need to be renewed? It does not, however, coverage can be added after a policy is purchased. Has the right to choose the title company, buyer or seller. Section 9 of the RESPA Act prohibits sellers from conditioning the home sale on the use of a specific title insurance company. So, and basically, what I've seen in my years is whoever is paying for the policy is the one who really gets to choose where they want to close. So, if your client is still paying for it, but they're requiring, to use, ABC title, then you have the right to ask them to pay for the policy if they're wanting to, dictate where it goes. So, okay, is title insurance required in Texas? No, but most lenders will require a title policy for their loan. So loan policies will cover only the amount of the loan and remain in effect until the loan is repaid. If you refinance, do you pay for a whole new policy? No, so you get a discount on the policy, on your lender's policy, for up to up to 8 years. So the first 4 years, you get a discount of 50%. And then the last half of that 8 years, you get a discount of 25%. And it's called an R8 credit. So like the letter R and then the number 8. So basically how we arrive at that discount is if you or your clients are refinancing, we take the amount that's owed on your current mortgage. We plug that into our system. We also plug in the date that you took out your last mortgage and the amount of that last mortgage, and the system calculates the discount for us. So that's how we know if it's going to be a 50% discount or a 25% discount. So if my home increases in value, am I still covered? You are covered for the value of your policy. If you add improvements to your home, or if your home increases in value over time, you can buy an increased value endorsement to cover the increase of your property's value for your title policy. It's the exact same thing for your homeowner's insurance. So I actually was just talking to my parents about this the other day. They added a new fence, they had the siding replaced with hardy plank and painted, and added a covered patio. And I told them they need to not only increase their title policy amount, but also their homeowner's insurance amount, right? Because you're only, you want to be covered for the value of your home in its current state, not from, when you purchased it 5 years ago or 10 years ago or 20 years ago. Anyone have any questions? All right, I think that pretty much wraps us up for today.
That sounds great. If anyone has
There's my-
questions, speak up. I'm gonna go over real quick the people that I have for CE credit. If you don't hear your name, you need to put your name and license number in the chat, and please Venmo $10 to CG Partners. I have Sophie, Jenna, Beverly, Stephanie, Paige, Maggie, Hannah, Jason, Darlene, Gavin, and Michelle Stum. So if I didn't say your name, I don't have you. Oh, John Kidd, perfect. Sounds good. Thank you so much, Randy.
Guys, and next month we are going over the closing statement. So that's a good one too. We're going to go over the seller side, the buyer side for loan transactions, and then we'll go over cash transactions as well. So, and what to look for on both sides.
Awesome. Thank you so much, Randy. Appreciate it.
Thank you, guys. Y'all have a good one.